The United Nations is designated today as World Pneumonia Day, and shareholders of American Greetings are just hoping their company is able to capitalize. Investor Beat starts now. Thanks for watching. I'm Chris Hill. Quiet day on Wall Street with no big macro news of note. On Thursday, Janet Yellen will testify before the Senate Banking Committee as part of her confirmation hearing, so tune in to C-SPAN to check out the exciting coverage. Joining me in studio today, Mike Olsen and Evan New. Guys, our top story, Apple's iPad mini with retina display is now on sale. Last month, the fruit company said it planned to start selling a new version of the mini with higher resolution and a 7.9-inch screen. They didn't say when. It sort of sprung it on us. It seems like it's getting some pretty good reviews.
Yeah, I mean, I think a lot of people have been waiting to get this device because it's kind of the, where consumers are really going towards preferences is these smaller devices. I think there have been reports that Apple is having problems manufacturing with Sharp, who had some kind of problems with the display yields, but it seems like they're starting to overcome that and starting shipping today.
You're an Apple guy in terms of gadgets. Are you going to run out and buy one of these?
So I think I little doubt that it'll be incredibly successful, and truly more power to them. But in the end, I kind of found my personal musings to represent kind of an interesting investing amalgam, which is that I really wasn't jonesing to go ahead and buy one of these. Own an Apple iPad mini. And the truth of the matter is, I don't understand how, why, next they're going to make the new and exciting widget. The reality is that Apple needs to continuously innovate and bring forth the newest and most exciting thing each time. And I just think that's going to get hard.
Yeah, if you just bought shares of Apple a year ago, it has not been a phenomenal 12 months. How much is this device going to help move the needle for them?
It's going to be harder this quarter because of the supply constraints that they're facing. I've seen a wide range of analyst estimates on how many they're going to be able to ship this quarter, anywhere from like 5 to 12 million. The street has no idea what to expect here. On the last conference call, Tim Cook did say, we know how many we're going to have. We don't know exactly where demand's going to be. Kind of a nice way of saying we're not going to be able to meet all the demand. But who knows how many they're going to ship. It's really hard to say at this point.
All right, let's get to some of the day's movers and shakers. U.S. Airways Group up slightly after getting the green light to finally merge with American Airlines. The airlines reached a settlement with the Justice Department, which had blocked the merger. What do you think? You want to own shares of the biggest airline in the world?
I'm not really sure that I want to. DOJ, they let this deal go through on the condition that they release their stranglehold on a few airports where they basically own every single gate. Bulls on the airlines might call this a victory. Right now, the airlines own something around 80% of industry, or the four largest airlines own something around 80% of capacity. And what the bulls want to say is this looks a lot like the rail renaissance, where they go ahead, consolidate, cut out unnecessary expenses, reduce excess supply, raise prices. Now, the airlines have done all of those things. They've raised prices, they've cut excess supply, and they've run out expenses. But they do not have one thing the railroads have: irreplaceable assets. There are really no barriers to entry in this industry, and so I have a hard time believing that these this sort of structural changes, which are necessary, are going to be able to take hold in the long run.
Shares of Dish Network hitting a 52-week high after third quarter results came in better than expected. They added some subscribers. Do you like the stock at this price?
Well, I think, starting with the numbers, they did swing to a profit this quarter, $315 million, which is compared to a $158 million loss a year ago. Did add some subscribers, about 35,000. But investors were expecting them to lose about 40,000, so this is definitely nice there. I think the biggest, or most important thing going forward is that Dish has acquired almost $3 billion worth of spectrum over the past couple of years, and investors really want to know, what are you going to do with all the spectrum, especially now that their bid for all the talk about trying to buy Sprint and Clearwire has fallen through. Now they have all the spectrum, you got to use it somehow.
Joseph Bank announces earnings in 2 weeks, but shares on the rise after the retailer increased guidance for the third quarter. Stocks at a 52-week high. Does that mean I have to stop making fun of this company?
No, I don't think you have to. This is about as exciting as that olive blazer that the guy is trying to sell you, who is also wearing the bad olive blazer. I mean, a long-time criticism of this company has been that they haven't been able to move inventory. They always have bloated inventories. And I have to admit, I was wrong about that because their inventory is timelessly bad. I don't understand why I want to pay 20 times earnings for a company that has to offer me, that is offering to sell me 5 suits for the price of half of one. They just have no durable.
You're sounding a little bearish.
No, and I also wish that they would change that commercial music. I literally feel like I'm gonna have a seizure when I hear
You amortize that over time, it pays for itself. Finally, Rackspace down after third quarter results. Profits fell 40%, expenses rose 24%. Stock's cut in half over the last year. Basically, what do you think? Do you want to buy on the dip here?
I don't know. Rackspace has been kind of taking a beating lately. I mean, revenue put up a nice gain at $388 million. Earnings were down in part because they've been spending a lot more on the operating side, marketing to try and get current, existing customers to really expand their business beyond what they have. On top of that, there's also a lot of pricing concerns because Microsoft has really been cutting Azure prices. Amazon constantly cuts prices in its Amazon Web Services department. I think they've cut prices like 30 times so far, and there's a lot of competition out there.
Is it bad like BlackBerry bad, or is this just normal bad for Rackspace?
It's tough to compete with such big players that are willing to cut. This is Rackspace's primary business, whereas for Microsoft and Amazon, these are kind of like side businesses, so they can be a little bit more aggressive on the pricing side, put the pressure on the smaller guy.
All right, that's going to do it for today's action. Give me a stock I can put on my watch list.
Sure, I'm looking at Weight Watchers. This company's had a tough run of recent. They've been bleeding members in their core program. They're facing competition from free calorie counting apps, and they have a pretty large chunk of debt. And broadly speaking, folks are just saying, is this a product or an offering that is in secular decline? And the reality is, I don't think that's necessarily the case. The price is 7 to 8 times free cash flow. So effectively, the market's saying this is a company in decline, and I don't really think that's the case. I think there's a world where free calorie counting caps and Weight Watchers can exist. They possess strong competitive advantages. They have a very widely recognized brand, clinically proven service offerings, and a cadre of tools that kind of creates some element of switching costs for users of the program. And as unfortunate as it is, obesity is an epidemic.
What about you?
I'm looking at T-Mobile. T-Mobile has, their turnaround is really starting to take shape. Over the past 2 quarters, they've added about 1.3 million branded postpaid subscribers after a long string of losses for many, many quarters. So they're really starting to turn around. I think their new strategy of pricing transparency is working. I think that right now their biggest weakness is their network, but at the same time, they're really aggressively investing in building that network. Through a series of events over the past year or so, they've really accumulated a ton of spectrum, and they're starting to redeploy that. They just announced they're selling $2 billion worth of stock to build up their war chest to make future spectrum acquisitions. So I think it's starting to take shape, and I'm going to keep an eye on it.
All right, for Evan New and Mike Olsen, I'm Chris Hill. Thanks for watching. We'll see you tomorrow.